Welcome to The Explainer. Today, we're going to break down a really powerful trading tool. Now, when you use it the right way, it can give you a serious edge in the markets. But, and this is a big but, most traders get it completely and utterly wrong.
So let's just start with a little bit of a puzzle. There's this super popular indicator out there, right? It promises to make market trends crystal clear. But for so many people, it just ends up causing confusion, getting them whipsawed in and out of trades, and, well, leading to a lot of unnecessary losses. And that tool we're talking about is the Supertrend indicator. In the next few minutes, we are going to cut right through all that noise and show you exactly how to use it like a pro. We're going to turn it from a source of frustration into your new best friend for clarity. Okay, so here's our game plan. We're going to start with the absolute fundamentals of just reading the indicator. Then we'll jump into 3 core strategies you can use. After that, we'll uncover the single biggest mistake people make. This is huge. Then we'll level up with some pro-level multi-time frame analysis. And we'll wrap it all up with your final most important takeaway. All right, first things first, we've got to get the basics right. I mean, to use any tool well, you have to understand how it's built from the ground up. And the Supertrend is no different. So what is this thing really? Well, at its core, the Supertrend is what we call a trend-following indicator. It uses something called the average true range, or ATR, which is basically just a way to measure how volatile the market is. Its main job? To help you figure out your directional bias. In other words, should you be looking to buy or should you be looking to sell? And the beauty of it is that it's designed to be incredibly visual. It's so easy to read. When that line is green and it's hanging out below the price, the market's in an uptrend, and you should be thinking bullish. When it flips red and it's sitting above the price, you're in a downtrend and you should have a bearish bias. That's it. Green means go, red means, hey, maybe look for some shorts. Now, the magic really happens at the crossover. See, when the price closes, and I mean decisively closes below that green line, the indicator flips to red. That's your signal that things might be shifting into a downtrend. And on the flip side, when price breaks above the red line, it turns green, which suggests the bears might be losing their grip and the bulls are taking over. Okay, so we know what it looks like and what the colors mean, but how do we actually make money with this thing? Let's turn this theory into some actionable strategies you can start using right away. You can really boil down the most effective way to use this into 3 simple, repeatable steps. First, you identify the trend. Don't fight the color, ever. If it's green, you look for longs. If it's red, you look for shorts. Second, you find your entry. And you don't just enter anywhere. You wait for the indicator to line up with other important stuff, like key price levels. And third, and this is crucial, you manage your risk using the indicator itself as a guide. Now, all 3 of those steps are super important, but let's really zoom in on that third one, risk management. Because this is where the Supertrend has this unique advantage that so many traders just completely miss. See, it's not just for getting into trades, it's for staying in the winning ones. And this quote just nails the concept. When a trend is really moving, the Supertrend line moves with it. But you'll notice, during those choppy, sideways periods, the line often just flattens out. That flat line becomes a perfect protective barrier, like a shield. You can tuck your stop loss right behind it, and it helps protect you from all that random market noise that might otherwise shake you out of a good trade. But here's the thing, even if you have these solid strategies down, there is one critical, fundamental mistake that trips up almost everyone when they first start using this tool. And honestly, getting this next part is what separates the pros from the amateurs. So here it is. You have to burn this into your brain. Price action is king, always. An indicator is never the reason you take a trade. It is only, and I mean only, there to support a decision you have already made by looking at the price chart itself. This is really the difference between small picture and big picture thinking. The amateur trader, right? They see the price tag, the red Supertrend line, and they just immediately hit the sell button. They're only relying on the indicator. But the pro? The pro sees that same exact touch, but they're also looking at the bigger context. They see the larger uptrend, a strong support level just underneath, and other patterns that are telling a totally different story. And this slide breaks down a classic losing trade perfectly. Mistake? Blindly shorting just because price hit the red line. But what was actually happening? Well, the reality was this was just a little pullback in a much bigger uptrend. There was a key support zone holding strong, and price was actually breaking out of a pattern that suggested a move up, not down. The indicator said one thing, but you know what? Price action was screaming the exact opposite. Okay, so now that we have the right mindset, price action first, indicator second. Let's put it all together and really elevate this with a professional-grade technique, using multiple time frames. The pro approach is all about using at least 2 different charts to answer 2 very simple but incredibly critical questions. Where should I be looking for a potential trade, and when should I actually pull the trigger? This table lays it out perfectly. You use your higher time frame, say a daily chart, to identify the where. These are your high probability zones, like a pullback to a major support level in a big uptrend. Then you drill down. You zoom into a lower time frame, like the 1-hour chart, to find the when. You're looking for the very first signs that the pullback is finished so you can get a super precise low-risk entry. And the benefit of doing this is absolutely huge. Think about it. Instead of waiting for some big, obvious confirmation candle on the daily chart, you can get into the trade way earlier based on what you see on the hourly chart. This just dramatically improves your risk-to-reward ratio, and it makes your trades more accurate because you're confirming your idea on multiple levels. So, after all of that, what's the one single most important idea you should take away from this? The thing that will help you master not just the super trend, but really any indicator you use. It's this. Think of the super trend as your co-pilot. It's an awesome navigator. It gives you valuable information. It helps you manage the journey. But it is not the pilot. Price action, the chart itself, that must always be the one flying the plane. Your analysis comes first, every single time. Which really leaves us with one final thought to frame your whole approach to trading. Are you looking for an indicator to be some kind of magic crystal ball that's going to predict the future for you? Or are you using it as it was meant to be used, as a powerful flashlight to help you see what's already happening in the market more clearly? The choice, as they say, is yours.